Good morning, everyone. This is Dan Rabari from iBooks Accounting. And obviously, the tax time is pretty much around the corner. So I'm sure everyone will be just looking forward to get their tax back as soon as the year is finished. Many people has already started submitting requests to our online website and started calling us to book an appointment as well. So today we're going to discuss about that, some tips and directions you can claim today. So let's run into it. So just an overview, what we're going to discuss today, mainly we'll be focusing on work-related deductions of home office expenses, the self-education, depreciations, motor vehicle deductions, donations you can claim, income and expenses from the gig economy like Uber, Airbnb, and things like that. We'll be discussing about super contribution you can claim and some of the big promises being offered on social media. So let's jump into it. So first one, the work-related deductions. Now, if you have spent money for your work, any employment-related expenses you have done, you can claim in your tax-related tax returns. Mainly the mobile phone expenses, the internet you have used, the computer you have been using for work, the repairs and accessories you buy for that as well. Some of us will be able to also claim the union fees, for example, nursing union fee, the retail employee union fee, and things like that. The professional subscriptions like CPA fee for accountant, the APRA fee for nurses as well, and things like that is also claimable in your tax return. So make sure you keep the receipts for everything you pay for your work mainly. And it's good to keep receipts, obviously, because anything above 300 needs to be substantiated with the proper receipt. So if any expenses, which is in total for the year is about 300, needs to have receipts. If you're claiming under 300 overall, obviously then you don't need receipts, but obviously you still need to have spent the expense. The next one, obviously before we go to the next one, actually there's one important thing we need to discuss is one warning, like ATU has received a big post in their funding, which they will be applying for checking real-time claims. Additional audits will be done this year compared to last year. So just be mindful on what you're claiming. Only claim what you're entitled to. Don't claim extra. If you just claiming for sake of getting more refunds, thinking, well, I'll get away with it, you might be lucky if you get, but the high chances are you probably will end up in hot water with ADO. Audit is not what you want to have. Prosecutions, will be also done for larger claims or any fraudulent claims. ATO will use that funding to prosecute people as well. So just be mindful about that. They got money to do it, so they got the resources to do it. So make sure only claim what you are entitled to and things which you have receipt for. Home office expenses. Now this year we also got some of the phone calls last week about this. Mainly due to COVID-19, many people were forced to work from home. Now, that's where the claim for this year for this home office expense will be quite high. Now, employees who regularly works from home or has a set aside office in your home exclusively for work will be able to claim this. The typical expenses you want to claim is heating, cooling, and lighting cost. The home office equipments and the depreciations, for example, printer, the desk, the computer you have been using, the laptop, and things like that. Then you can claim this by way of cents per hour basis as well for heating, cooling, and lighting costs mainly. The rate was 52 cents per hour from 1st July 2019 to 29th of February 2020. But due to COVID-19, the ATU has realized that people will be required to work longer hours and spend more time. So obviously use more resources technically. So they have increased and pump up this deduction rate from 52 cents to 80 cents from 1st March 2020 till 30 June 2020. So that's a good news. People will be able to claim more if you have been working from home, basically. All right. So the next one is the self-education expenses. So people who have been, basically studying for work or any study which is directly related to improving current skills or likely to increase income from your current employment, obviously will be able to claim the self-education expenses. For example, the course fees you pay to university or TAFE, the textbooks you buy, the stationeries you buy to study, the student union fees you pay for this study as well can be claimed. Any depreciation for assets such as computers, desks, and tablets and printers can be also claimed for self-education expense. Now, as I mentioned, just make sure this study is directly related to your employment, that is current employment. It cannot be the study which will get you a new job in future. It has to be related to your current employment. Either it's maintaining or improving your income or skills. So just be careful on that. We have seen people falling into traps where they end up claiming their professional year fees, saying, well, that's a big money to claim and that's going to give me more refund. We have seen people saying, well, I have claimed this last year, never had any problems. But that's you've been lucky enough to not having end up in audit. We have warned people previously as well that you should not be doing that. It has to be directly related to your current employment. Only and only then you can claim the self-education expense. Depreciation can be a good claim as well. So any assets you buy under 300 can be immediately claimed. Obviously, you need the receipts, and it has to be used to generate income. If it is more than $300, it has to be written off over a number of period of years. So just keeping that in mind. The things you can depreciate can be tools for tradespersons, calculators, briefcases, computer equipment as well, the technical books you purchase as an employee, or any minor items of plant purchased by a landlord when they are renting out the rental property. Obviously, in this video, we won't be covering rental income and expenses, but that is also can be claimed. One of the big deductions normally we have seen being claimed in recent years is motor vehicle deductions. That's one of the major contributors in maximizing the refund we have seen people claiming. With that one, mainly, it has to be work-related travel. We've been asked by people to claim saying, I live 50 kilometers away from my workplace, so it's 100 kilometers two ways from work, home to work and work to home. But the travel from home to work and work to home is not claimable. It has to be from one workplace to another workplace, or from workplaces to an alternative place of work, or work-related travel. Either you're going to a site or you're going to see a client, and those sort of travels can be claimed. Now, in order to claim these motor vehicle expenses, there are two different methods. One is cents per kilometer, which is widely used method by many of the employees. When your annual business travel is less than 5,000 kilometers, you can claim using cents per kilometer method. Now, this method includes all the vehicle running cost and expenses, including depreciation. So it cannot claim the vehicle purchase cost separately if you're using this method, but that the rate is sufficient enough to cover that cost. This year, for 2020 financial year, the rate is 68 cents per kilometer. So just keep that in mind. It has changed last year from 66 to 68 and staying 68 cents this year as well for 2020 financial year returns. The beauty of this method is you do not need written evidence to show how many kilometers you have traveled, but the ATO and obviously therefore your tax agent will probably ask you to show how you work out those kilometers. It cannot be just random number showing claim this much. It has to be substantiated, saying was you actually travel that much amount of kilometers. Now, ATO has also flat concerns over number of times that taxpayers are automatically claiming maximum 5,000 kilometers allowed, regardless of their actual travel. Just be careful on that. You only need to claim, or you should claim, the travel you actually have done. You don't want to claim fraudulently maximum 5,000 kilometer, thinking they will not ask. If you get audited, they will ask you to substantiate the kilometers, how you work out. The calculations they will be asked by ATO, and if it is not proven, the claims will be rejected and you might get penalized for that as well. The other method is not that widely used, but the logbook method often end up getting you more deductions if you follow logbook method, mainly when your travel exceeds 5,000 kilometers. We will be able to claim fuel, registration, repairs, insurance, or any related expenses for your car, including the depreciation as well for the vehicle. But the criteria is obviously you need to have a valid logbook to substantiate your business use. So you need to maintain a logbook over 12-week periods, which can be used until your business use has changed substantially, or for 5 years periods, which is allowed by the ATO. If you're not sure about what you can claim, how to prepare a logbook, you can contact us and book an appointment with us as well. We'll go through that with you when we do your tax return. Donations. Now, one of the common questions get asked us, I've donated to this on GoFundMe campaign. Can I claim that or not? There are certain rules behind what you can claim as a donation. Mainly the donations which has been given as part of the workplace giving normally get reported on your ATO pre-fill, hence it can be claimed. Payment summaries or statement from your employees enough to substantiate those claims. Now, any donations which has been paid outside the workplace arrangements needs to have receipts to prove the claim. But same time, the donation has to be made to a registered charity with DGR status. So you can check on ABN lookup to find out whether the charity is actually registered to receive deductible gift or not. That's called DGR, deductible gift recipient status. It has to be there, otherwise it cannot be claimed. Gig economy. Now, technology has changed a lot of things nowadays. You can use Uber by application, Airbnb to share your accommodations and things like that. Now, income and expenses from that gig economy is reportable, so just careful on that. So if you're driving people around, or you're doing odd jobs on Airtasker, or renting out your house or possessions via Airbnb, or run a social media accounts, or sell products on eBay, this all is reportable income. ATO is receiving data from this range of websites, Airtasker, Uber, Airbnb, eBay, and that will be matched against your tax returns, obviously, and make sure you have reports and records kept correctly. So same time, obviously it is reportable income, but any expenses you have incurred towards earning that income is also claimable. So just keep receipts for those one as well. So income is reportable, same time expenses are claimable as well. So just be careful on that. I've seen people started a small store on eBay without realizing that it is taxable income, and they never report it and end up having hot waters with ATO, because the ATO found out by data matching, and that report returns get audited as well. Super contribution limits. Obviously, if you are paying super from your personal cash up to $25,000, it can be claimed towards your tax returns as a deduction or personal super contribution. The criteria is obviously you need to notify your super fund that you are intend to claim this as a deduction, so that they will issue a statement confirming the amount you can claim. Now, the benefit, if you are a low income earner, sometimes you can also attract co-contributions from the government of up to $400. That can also help your super fund a little bit. So there's definitely a benefit of doing that. Now, medical levy exemptions. Now, we have been often asked, do I have to pay medical levy or not? Obviously, if you are an Australian resident or a citizen and having Medicare card with you, obviously you can't claim exemption from that. Excluding a couple of exemptions you can claim for a number of reasons. But mainly, we're talking about today is the temporary visa holders, such as student visas, 485, or any other temporary visas, where you are not entitled to receive Medicare card. So you can't just claim thinking, well, I'm a student, I don't have to pay Medicare levy. What you should do is fill up the form and send it to the Medicare Department of Human Services. They will issue a statement or letter saying you are not entitled to Medicare benefits. Only then and then you can claim that exemption. Now, with the form, you need to send also your certified copy of passport. It has to be certified by a Justice of Peace or other people allowed on the list. There's a list on the form as well, so you can check out that. This is where you actually can potentially save huge amount of tax because the medical levy is about 2% of your taxable income. So if you're entitled to it, I think you should do it because it can give you good return. Big promises and low fees on social media. We have seen many posts there. Let's talk about that. So obviously, if you're paying the low fees, normally everywhere around the world, you get what you pay for, and tax is no difference. So if if your refund is too good to be true, then either you or your tax agent probably is breaking a law. Check if your agent is registered with tax practitioner board or not, because there are many Phoenix or what you will call the fraudulent tax agents who are not registered to give you advice. They are still doing the tax return preparation service. What they do is they launch your return on your MyGov account, which is technically you are lodging yourself. So just be careful on those. Beware of those people. They are not qualified. They don't have sometimes knowledge to support the filing what they're doing. They just did a couple of times themselves. Think now they can do it for other people as well. It is illegal. Now, things to watch out and find out whether they are fraudulent or not. When they offer a very low fixed fee, there might be something fishy. Not necessarily every time, but there is a possibility that they might be not registered. If they are promising really large refunds, unrealistic refunds, then you want to be aware, because technically you can only claim so much based on your income, your occupation, and what you have spent. If you're promising to be very large refunds, there must be something fishy there. If you're charging you percentage of your refund as their fee, then they will try to get more refunds for you, obviously, to get more fees. But that means they might be putting some unreasonable and unethical or illegal claims in your returns, which probably will end up have very problematic issues with 8 years when they get audited. When the agents are not spending enough time with you on your return, that's also one of the alarming things, because to understand your circumstances, you need to spend time with you to understand your circumstances and then give advice what you can claim or not. If they don't ask for your receipts, if they don't ask any questions, straight away there's a problem, because to claim anything you need to have receipts. Particularly your total claim is about $300 in a year. If they ask you to sign blank returns or incomplete returns, there's something fishy. You don't want to do that. Make sure you check everything before you sign, because ultimately responsibility is yours. It's you who have the responsibility to report it correctly. Failure to do that can face penalties and interests, if anything is wrong on your return. So just be careful on that as well. This video has been prepared for informational purpose only. It is not intended to provide or should not be relied on for any tax, legal, or accounting advice. Consult your own tax, legal, or accounting advisors before engaging in any transactions. If you're not sure what to do with your tax return, you can always book an appointment with us. We are happy to help. Now, our fees, if you want to not take risk of losing the entitlement, what you can claim, we can help to prepare your return. Our fee starts from $77, including GST. Why you should choose us? We are a CPA practice. We are a tax agent, registered tax agent with tax practitioner boards. Our fees are technically in different slabs. Your income below $22,000, it's $77. If it is above $22,000, it's $99 for standard returns, which doesn't include any capital gains or rental properties and other complex issues. If you are a student with a valid student ID from university, your fees will be reduced to $77 again. As part of the community, giving back something to the community, we have also a free service for tax return preparation service for pensioners and our old fellow citizens. So if you know a pensioner with only pension income in their returns, feel free to give our number to them. We do that their refunds for free. How to connect with us? You can always follow us on Facebook by searching iBooks Accounting. Our phone number is 073557725 if you want to book an appointment, and we'll be happy to help you with your tax affairs. We'll come back with other tips and for particular occupation related deductions soon as well in the next video. Until then, goodbye and have a good day.